Bom dia a todas e todos. É prazer e privilégio estar aqui em mais
It's a privilege being here in this forum, sponsored by Instituto Brasileiro de Direito Tributário, Tax Association in Brazil. This association is fundamental to study tax law. It's an honor being here, and I ask your attention to people that are here, and my homage to Eduardo Chueire, of course, that has invited me, and to my dear President of Brazilian Institute of Tax Law, Mr. Ricardo Mariz Oliveira. It's a pleasure to share the table with you, and we will start immediately our work. This panel is very enriching, a theme that is very important and present, and it has debates in our panel that are very, very important. Our objective in this panel today is discussing taxation in times of COVID-19, and we will deal with that. We will see deduction in donations, taxation, concerning several aspects and subjects related to the present pandemic world and a big impact on lives and health of people. In a very dynamic way, we have to analyze the economy and taxation. We are crossing exceptional times, and measures are required that are not according to the normal standards that we are used to, mainly and also in taxation, and requiring from the government several measures which are outside the historical parameter concerning governmental rules adopted in situations that are tough. In this situation, it's critical. It's a deep crisis. We will count here in this panel with the cooperation presence of professors, Dr. Bruno Silva, professor of University of Amsterdam and coordinator of ELEMA International Tax Law, and also a lawyer in Holland, and is a master and PhD in Amsterdam, and his cooperation uh, is good, as well as Andrés Baez Moreno, professor of Universidad Carlos III in Spain, and Professor Carlo Garbarino, professor of tax law in Italy, Bocconi, and also talking about transfer price, and also with master's degree in School of Management, and also, and the CV is being read by the lady. Professor Ricardo Mariz de Oliveira, his CV is also being presented. He lives in Brazil, and he's president of our Instituto Brasileiro de Direito Tributário, Tax Law Brazilian Institute, and participant in several forums in the academia. We have professors here that are invited to take part in several congresses talking about Brazilian themes and contemporary themes. We also have the support, the precious one of Dra. Juliana Midori, Kuteken, which is doing her master degree course and focused on IBDT's affairs. I think that I have presented everyone here around the table, and with these words, we open the discussions with the first part of this panel dedicated to taxation in times of COVID-19. We will discuss concerning donation deductibility and taxations of governmental subventions with themes that are concrete as well. We have discussion about COVID-19 and the restrictions concerning mobility of individual and discussions related to characterization of permanent establishment, residents of companies, of workers, of multinational companies and national companies, and also the fixing of the residence. And who is taking the floor now is Professor Andrés, who will foster for thoughts here. Professor André is taking the floor. Muito obrigado.
Thank you very much again for the invitation. I think this is the third time I'm in this international congress. It's always a pleasure, not such a pleasure as usually, but of course, there is an important personal part in all this congress that we don't miss, even if we are so far one from the others, physically, of course. Of course, COVID-19 has brought many issues for taxation, in particular for international taxation in general as well. The panel, and that's the way we organize it from the very beginning, is just focused on a very specific issue regarding restrictions on mobility of individuals. Could I have, please, next slide? The problem, particularly the problem with dealing with here, is it's quite easy. COVID-19 and particularly the administrative measures deriving from it has generated displacements of individuals. Normally, we can talk about an individual that is outside his regular place or country of residence, or, and this is even a bigger problem, from expatriated individuals that have came back to their original countries or countries of origin due to the pandemic, just and wait and see at home. This is very common. When things go wrong, normally people return home. The principal fear with this movements or restrictions on mobility of individuals, however you want to call them, is that they might provoke changes in residence of individuals, in as much as many countries have as a sole criterion, as a main criterion for residence of individuals, the permanence of a person in a territory for a length of time. The emergence eventually of PEs that didn't exist before, particularly in those cases in which workers are performing services from their homes in what is called a home office, normally displaced from the place which is their normal place of residence or country of residence. And even, and this could sound surprising, but it's also a topic here, changes in the residence of companies due to changes in the place of effective management. And this not only at the treaty level in the prior version to 2017 OECD model, but also in domestic law that uses very often POEM as a criterion for the residence of companies. These problems were perceived very soon by the OECD and by the public in general, and the OECD not following a sentence that I think should be followed always in these situations. It's actually, in times of desolation, never make a move. This is a sentence of the Spanish philosopher. Made a very quick move, and on April 3rd, published a paper. It's called a note from the Secretariat saying, well, look, this might generate problems. This might change residence of individuals, make or provoke the emergence of PEs and change place of effective management. But don't worry, because business will follow as usual. And this is quite strange because if you think about our current international tax regime, it is mainly focused and based upon the presence of individuals in a territory. So it's quite shocking that the movements generated by COVID will not provoke any changes in international taxation. How does this note come to this strange conclusion? Well, first of all, and this is not the point or the main point of this panel, but I don't want to miss the opportunity to mention it, manipulating the facts. Well, actually, this note says, well, this is not very common. So the fact that you will have long time displacements will not be very common. Perhaps you have displacements, but they won't be very long. This is April, remember? And now in September, we already and still have people displaced. Of course, not very massive people that were stuck somewhere in the middle of the Pacific in holidays. I'm talking especially about these repatriated expats that keep on being home. How does the OECD get to this business as usual? Additionally, while forcing interpretation, there are many concepts, I mean, old framed concepts, almost 100 years old, in treaties that have been forced in this note. If you want, in the debate later, we can do some references to this. I think particularly the manipulation of the concept of place of effective management is particularly relevant here. But particularly, and I wanted to go especially into this issue because I think this is crucial, by perverting the nature of tax law. Well, in my view, tax law is purely objective, whereas the note is all the time saying regarding all these topics, changes of residence, emergence of PEs, change of poems. Well, look, actually, all these stays of an individual in a territory are involuntary. So the individual doesn't want to be there. So let us not count these days of presence in a territory. Next slide, please. I think this perversion doesn't take into account that intention should be totally alien to tax law. Of course, if we are outside the specific field of criminal tax law, in which we are not. This is not just a problem of evidence. We comment here that, well, it is very difficult to prove the intention. Of course, it is not just the problem of evidence, which it is. But of course, if the evidence of intention would be a crucial problem, then criminal law wouldn't exist. I think there is an additional issue here, and that's essentially a matter of constitutional law. And you have in front of you the question I think is crucial for this discussion. What do intentions got to do with the constitutional basis for taxation, ability to pay or benefit principle? Just compare, and this is the easiest case, taxpayer A and B. Taxpayer is in country S, taxpayer B is in country S. Taxpayer A wants to be there, taxpayer B doesn't want to be there. Should this make a difference in taxation? Of course not, because the link here, the original intention of taxation, the basis of taxation is essentially objective. And constitutionally, I think worldwide is integrated by either the principle of ability to pay or the benefit principle, depending on we're talking about residents or not residents or the original or traditional or theoretical framework we use for this. This intentionalization of tax law is a path that the OECD has already started in the BEPS project. And I refer here, we can go later on in the discussion to this, to the principal purpose test, which is a general anti-avoidance rule essentially based upon subjective intentions of the taxpayer, which again should be and have always been totally alien to the dogmatic basic structures of tax law. Here, I just want to finish my 8 minutes with a reference that I got particularly from Brazilian academics, because I think this was very clear. And Brazilian academics talk, well, you cannot be forced to perform the taxable event. So if you are in a place just by chance, you don't want to be there, and you can move and you become a resident, at the end, you're being forced to perform the taxable event of income of personal income tax. Well, I totally disagree with this, but as far as I think that we will hear Professor Mariz de Oliveira extensively on that, because I have read his paper before, I don't want to invade his space and finish here with the time I've been granted. Just in the next slides, you have the two papers in which you can find in detail this and other reflections on COVID-19 and international tax law. Thank you very much.
Thank you, Professor Baez. Eu gostaria de convidar o professor Ricardo para expor.
I would invite Professor Ricardo.
I invite Professor Ricardo to address, we talk objective criteria, and in face of this situation, we want to accept no circumstances, what we could take into account, the intention in the characterization of residents regarding taxing. Before starting, good morning, good evening, depending and based on where you are located. I, as the chairman president of the Institute IBDT, I'm sorry, I thank your presence in this panel and all the attendees also. I'll briefly talk about the Brazilian situation, showing that there is a huge importance in this question. The residence in Brazil is taxed on the worldwide income, and those not residing in Brazil, it's taxable only at source through the income tax regarding income made in Brazil. The aliquots or rates are different. Those who live in Brazil, it's up to 27.5%. At source, we held it varies the rates. The general rule is just 15%. So this issue regarding residency impacts directly several aspects. The tax is being leveled on individuals. In the Brazilian law, we have two criteria to establish the residence and the consequences I just mentioned. We must have initially the criteria that I call subjective criteria is intention. Taxpayers want to fix residence in Brazil and abroad. And this is the first criteria. The second criteria regarding the more objective criteria, which is the permanence in Brazil or abroad with a time lapse. And then we have two rules. When someone resides in Brazil and leaves the Brazilian territory without the intention of remaining abroad, it keeps on with the status of being resident in Brazil. During the 12 first months, they stay abroad. After, on the 13th month, it's deemed non-residence objectively in Brazil. Conversely, the non-residents, they can express the intention of coming and reside in Brazil. At the moment it arrives in Brazil, the visa for entering the country is an element of this showing this intention, or someone that comes to work as the employee of a company headquartered in Brazil is an expression of this intention. Objectively, if it's not expressed the intention of being resident after 183 days residing in the country, 183 days as of commencing on the first entry in a 12 months time is counted after 183 days deemed as the resident in the country. But the second rule, interesting to say, because it counts more than one entry in the country. It's not 180 days in sequence. It can remain 50 days in one time, 20 days in the other. What counts is the total of permanence in a time frame of 12 months. The oldest entry in the country, it starts to count. So this criteria is being applied in real life, normal life of taxpayers without much problems. Of course, we have those practical cases. We have issues regarding evidence of the effective residency in country or the intention, but rules work sort of well and without that much conflict of being construed or enforced. Nevertheless, with COVID-19 that we are experiencing, we had those cases of those who remained impossible to go back home, the source country, especially those who traveled from abroad, and the term of 183 days as of one more than one entry in the time frame of 12 months, those who were forced to remain in Brazil more than 183 days. If we enforce the objective rule, their residents with all the outcomes arising from this and applicable to the scenario or situation. It's not something that's being faced by courts. There's no case law on this, but my understanding is that in a situation like this one, if the individual cannot exercise their will, intention of going back home and keep the condition of non-residence, the objective rule must have an exception because it's inciting a force majeure preventing this individual to do normally or exercise his or her right. This is my personal opinion, and I place this to be debated, shedding light that there's no case law or precedents regarding the subject. Thank you very much. Ricardo, I think we have two positions highly conflicted. Bruno, do you want to resolve this tie? Well, thank you very much. Good morning to all. It's a pleasure to be with you. Unfortunately we cannot be present, but just live. I have been the only one that's not Brazilian living here. I came back to Europe on the lockdown day, so it was a privilege to go back home. I will, as the panel is in English, although I know I'm learning Portuguese, but this is my opinion. Obviously, in my panel, I'll talk in Portuguese, interventions in English. Bem,
by the first question that I want to ask. And I don't know if that was also what Andres asks himself when he writes his article and makes his comments. First, can the OECD commentary, as it is now, address this situation? Which is the same question that you'll see that I ask when we talk about transfer pricing. So basically, the OECD grabs into on the existing commentary and say, we don't need to do anything because it's already there. Can we say that this was an unforeseen circumstance that the commentary was already addressing? Which probably the answer of everyone is going to be no. Second issue that, and I'm going to address specifically the question of Juliana to give my opinion on this intention. But the second issue that I want to raise that Andres touched briefly, and I think it's really important. When this note is written, is on the context of being temporary. And there's a lot of discussion, maybe Andres is going to pick up later, even in the context of the place of effective management, words like ordinary, usually. So what is ordinary and usually now? I mean, the lockdown is here and it's going to stay, and it's going to stay maybe for 2 or 3 years. So we just continue like nothing happened, and it's still ordinary where the decisions are made, because maybe this was written for 2 months lockdown, but it's going to continue. The third aspect of the subjective versus objective element. I think we all want to achieve what the OECD says, that this should not have any impact. I think we all agree that that should be the way. The issue is it should be achieved this way. I think, I'm going to give you one example when I think that clearly, I think that for the text sheet interpretation in the commentary, the subjective element plays no intention, at least in the context of the tiebreaker rules. When you analyze especially the center of vital interests, personal and economic circumstances, it's always about facts and circumstances. There's nothing there on intention. And then there isn't case law on this. You have frequent situations that you have the economic ties in one country, the personal ties in the other country. So what should be relevant? personal or economic? Well, it's an ongoing decision what is more relevant or not. But if the intention of the taxpayer will pay any relevance, we should ask him, okay, you have the economic ties in one place, the personal ties on the other, what do you think it's better? Then he should be allowed to choose. He could say, well, I left my family behind, but actually, I just want to be a resident in the place where I earn my income. So I think for me, it's more important the economic ties. Or for other taxpayers, they should ask him to say, no, for me, the more important are the personal ties. So my central dividatory interest should be this one. But no, that is disregarded in general. And I'm saying in general because I think in Germany, there's case law when they ask the taxpayer. But under the OECD commentary, there is nothing of subjective element being relevant. Nothing. So I think that this is a step forward. There is nothing there that gives relevance to this. A last comment that I want to say that I'm also surprised is when the starting of this, the tax treaty note published by the OECD was that dual resident situations are very uncommon. Really? I mean, I thought that the reason why we changed the place of effective management criteria to the map is because it was actually pretty common and gave rise to treaty abuse. So that's why we needed to change. So I was very surprised. And it's so uncommon that now everyone is discussing, and most tax authorities or several tax authorities in the world are doing what I think is the right way to achieve this, concluding mutual agreement procedures to give certainty and to say what is the relevance residence. So in my view, I think the subjective element is not relevant at all for the purpose of the tiebreaker rules. Thank you.
Obrigada, Bruno. Antes de devolver a palavra para a Raquel...
Thank you, Bruno. Before passing the floor to Raquel, we would like the audience to the role of intention. Should it be taken into account or not? We would like the attendees to be part of this panel.
So we can also give our opinion, huh? All right.
Desculpa, Ricardo.
Concerning, I don't think there is some disagreement between Baez and I, because I expressed the perspective of international treaties of OECD. Exclusively Brazilian law was mentioned in my case. If we are dealing with a situation of resident in a country where we maintain an agreement, the rule may change. I'm mentioning only the rules concerning Brazilian legislation, because with another country it may change.
Eu só queria lembrar.
I would like to add something. I see that there are questions being taken note in the Q&A, and maybe you can address your questions to the panelists, and as possible, and respecting the time constraint, we'll select some questions. And if we have space for more, they will be sent for a specific panel that will happen at 5 o'clock tomorrow. Questions that have not been answered now, today. So people are answering our research, and I call the attention of the participants. If you have questions, please use the Q&A area.
There are some questions. One in specific that I think, Andrés, you
Existem perguntas que
It's provocative as always, so maybe you want to address. I can address it as well.
Juliana, a gente já tem o resultado da pesquisa?
Do you have the result of the research? É uma situação clássica.
I did just to reintroduce names to Professor Schwery when he, in a previous seminar, was very much in favor or not so much in favor of intentions in tax law, but of saying, well, you cannot be forced to perform the taxable event. And that was exactly one of my questions to him. Well, if I was equalized here to Bill Gates, go to Brazil and commit a crime, and then have to be in jail in Brazil for 30 years, let us imagine, and I have a huge worldwide income, am I not a resident in Brazil because I am forced to stay in Brazil? Of course, this is an extreme question, but there are other common day-to-day questions regarding exactly the same issues. What about tax consequences of expropriation? Expropriation is normally totally outside the intention of the taxpayer. And in many countries, mine is not an exception. And I think in Europe, this is universal, even if this might sound contradictory. In Europe, this is common. There are tax consequences of expropriation. So actually, there are lots of cases in which taxes, not to speak about fees, because in fees they're even more common, in which the taxpayer is forced by the law to perform the taxable event. And I think this is the clearest indication that tax law has nothing to do with the intention, or should not have anything to do with intention. Of course, and I go back here to the question of Professor Mariz de Oliveira. I was talking in general, I was not talking about Brazilian law. If we go to Brazilian law, then of course there, the subjective approach is clear. My question then there will not be, is this the law? Of course, that's the law. My question would be, is this constitutional? Because going, Professor Mariz, to your question of this poor person that stayed, let's imagine that Professor Bruno da Silva couldn't go back to Portugal and stayed in Brazil and became a resident in Brazil, could become originally or eventually a resident in Brazil. My question would be from a strict ability to pay perspective. Which would be the difference between Professor da Silva that became a resident in Brazil and earns X a year, and a person who was a resident in Brazil and still is a resident in Brazil as he used to be and earns exactly the same amount? So exactly the same economic and personal situation. There would be no difference from the point of view of ability to pay. So why should the consequences be different? Why should Bruno da Silva be a non-resident in Brazil and this traditional Brazilian resident be a resident in Brazil? But of course, I was talking about treaties and I was talking about domestic law that does not use subjective criteria. Of course, Professor Mariz de Oliveira, I was not talking about the particular situation in the domestic law of Brazil. And I shut up because I could be speaking for hours from this, and we have still a lot of things in front of us. Thank you.
Obrigada, professor Baez.
Professor Maes, Professor Carlo, we have food for thought, provocative to you, concerning domestic law, possibility of having the intention. Is it relevant for resident purposes? And how does it change in the perspective of a treaty if the treaty defines resident for the domestic law? It's an issue that's much more difficult. I cannot answer for sure a situation that is dealt with less insuredness, I would say, about it. If we submit the jurisdiction of a Brazilian court, the decision would be in the same way I mentioned before. It's not possible. The person cannot move from one country to the other. It's a first majority situation. So it impedes the use of the norm of the objective criteria. Of course, tax depends, they are ex-lege, it depends on the person, on the individual. The contracts, the agreements are obligations, but in practice, we see the fact that so there is the generator of the fact, and it is voluntary. It's an aspect, the taxable element, event, the taxable event. So concerning the national law, the definition of residence, of domicile, is affected by the intention. So in the tax code, we see it. So situations that are not normal So there is the contribution of the effects of the pandemic, for instance. And of course, it's clear it's not possible. The person cannot move and cannot do what normally would do. Let us see, because of the pandemic situation, it's a force majeure. This is my thought, and I remain. Okay, as we have the time we have to follow, and we have constraints, I will do just a wrap up and we'll change the topic in our panel, saying that I totally agree with Dr. Ricardo Mariz Oliveira. So a vote in his position, I back him up on the observation that Dr. Ricardo has said, specifically concerning the Brazilian legislation. Unfortunately, we have to deal with institutes, law institutes which are fundamental, like force majeure and the specific cases. The obligation is ex lege, but the preparation in terms of tax legislation, there is the interference of exogenous factors, and pandemic is something peculiar, and it gathers all of a sudden in a difficult way taxpayers that are in situations that are unexpected and not under control. They want to fulfill the law or move to one place to the other, and we have specific examples in Brazilian tax law. And it's good to bear in mind that it calls us to think that we do not have to change the concepts that are fundamental. And as we have time constraint, I will pass. Sorry. Before that, I think that Juliana wants to share the result of the research. Is it, Juliana? It's the no, it will be at the end of the panel. It is better, right? So we go ahead to topic 2, which is the second part of this panel. We'll talk about deductibility of donation. And immediately, the floor with Ricardo.
Thank you very much. This subject is one also typically Brazilian. I'm talking about an issue that is being experienced by many companies headquartered in Brazil regarding income tax. I will talk about it on an overall capex, also encompassing social contribution on profits. For shedding light for those who are watching us out of Brazil, not just the panelists, but the foreigners. Brazilian system of tax withheld on income. There's a field for tax being held. There's a fact of adding assets. But adding assets, accrue of assets arising from income, as we call that in general terms would be capital gains on an overall. Not including in this field the assets arising from assets transfer, which are non-burdensome, not arising from economic activities or businesses that arise from, let's say, not counting of one asset to the other, let's say donation, subject to another taxation or inheritance, that you have another type of tax on heritage. So the fields we have the entries of income and non-interest of asset transfer. Donations, they are in this field that's peripheral, let's say, for income tax, because these transfer, they're negative transfers. They do not enter positively on the assets, but they exit in a negative way of the legal entities, so they do not interfere with the valuation of the event of capital of assets. I would like also to explain our system of asserting the base for income tax purpose. It's similar to most countries, or most of the countries at least, i.e., we have accounting profit, and then we adjust more or less according to tax law, in a way that we have within Brazil's legislation several assumptions of expenses deemed non-deductible for tax purpose. One is donation. We have a provision in the law, Article 13 of Law 9249 of 95, with two rules. First, it states the non-deductibility of donations on an overall, generally speaking. The second rule, exception of the first, allow deduction for certain scenarios, very limited. You can deduct sometimes of entities of the third sector, social character, and requiring several formal requirements and limits to 2% of the profit before you make the deduction. So we have addressed a lot in this phase regarding the pandemic, if this rule is applied or not. Because many companies are doing voluntary donations. Of course, if voluntary, of course, is an act of gratuity. So they're donating some cases very high values. They're substantial values, in fact. Sometimes it's money, sometimes pieces of equipment for hospitals, and facial protection equipment, drugs, and so forth, in a way that companies are, they face this issue. Are these expenses deductible or not? When I enforce the law, apply the law, explaining that most of these deductions, they do not follow the rules of exception, because for those entities specifically provided by the law, or if they exceed the limit of 2% in many cases. So the question is, during the pandemic phase, do we apply the prohibition of deduction standard? The system as it is now, according to the Brazilian legislation, deductibility is prohibited. And I don't see at first any barrier within the Constitution in order to fight against a standard that avoids and prohibits the deduction. Our system, some authors call net income. In this system, we have a the constitution is pegged to this because we have very specific rules. Our constitution is very specific regarding taxation, and it sets forth the income tax must comply with the universality principle in such a way it takes into account the taxable event, all revenues and so income, less expenses and costs in order to have this income. The legislation to be used here, according to the constitutional competence regarding assets and income, it has one that says it's deductible all expenses that contribute to obtention of profit to make or to maintain the source of production. What happens with donations? That it's not a necessary expense to obtain profit, need to an expense that it's needed in order to maintain the payment source. Of course, it reduces the increase of equity or assets, but from the period that not due to be an investment reducing costs and expenses, but in fact it's induces to the increase because the use of assets or profits produced to do this act of donation. And there are some effects arising from it: humanitarian effects, social effects. The Brazilian law for partnerships recognize that companies on an overall companies, they have a social role, but it's not an illegal expense. They're legal expenses, but it touches the prohibition of deductibility. I have thought a lot and addressed this with many peers, including within IBDT, and we have found divergent opinions. I through the construe of this rule by prohibition, or the one that allows this deduction, the exception to the rule of deductibility, I cannot historically and in theory, in the purpose, the end, and so forth, I cannot reach a consensus. Say, well, during the pandemic period, it's this. Not in casu legis, either social scenario where the law was enacted and so forth. So changing the social scenario will not change or amend the law in such a way that I believe that there's a huge difficulty to establish some grounds for deductibility. I would like to say that such donations, they are not even expenses per se. They're mismatched financially wise. They're exits of money, not directly related with the business activity. They are events that reveal a destiny or employment of this profit. And recently we had in Brazil, as I mentioned at the beginning, we have two taxes in Brazil on income for corporations per se. And so social contribution on profits and tax per se. So it addressed the constitutional aspect of expenses as social contribution on profits, that it's not exactly this point of view, this assumption to say so, that profits were made and obtained in the past when you have the social contribution payment. So it's part of profits produced that is earmarked for the government as taxes. The same line of thought for donation. It's not something that contribute for profit. It's earmarking part of the profits already reduced. I know it leads to repose, and it's an emotional thing for all that analyze this, but technically wise, it's quite difficult. Professor Jueri talking with me about this event, he addressed the point of contribution capacity and others. I have to be quite brief here due to time constraints, but contribution or tax-paying capability, it's difficult regarding this aspect we have regarding the deduction of donations made. Capacity to pay taxes is expressed when the taxable event takes place. And in Brazil, we have of income, which is a requirement, an indispensable for the taxes to being levied. The availability of income is to have income as the possibility of using it in something. And a different way of saying the availability, it's, let's say, income paid in. It's not a potential income that it's there, paid in. And we deem as such when it becomes excludable.
This in the law school, the sentence of the teacher, that is my professor and mentor today, is, well, if you do gifts, perhaps you will go to heaven, but you still have to pay taxes. So I totally agree in this case with Professor Mariz de Oliveira, and look, I even agree in the law, which is quite strange, being that we come from so different systems and countries. The law that you mentioned in Brazil is exactly the same in Spain, with the only difference of the 2%. Here is not 2%, it's 1%. Perhaps is that we are not so generous. I also agree almost completely in the interpretation analysis. I don't think there is any way, even in the most forced teleologic restriction, to force these limitations on deductions to make this particular donations deductible. And I want also to add an additional argument. And my argument is that it is not only that the law is like it is not only that the law cannot be interpreted in a different way as we interpret it. It is not only that this law is not, in my opinion, in breach of the Constitution. In my view, it should be like this, because if we start granting deductions to whatever kind of donations, we run the risk of a privatization of budget law. In our system, in our democratic system, I think we all assume that taxes are the main stream of resources for the public spending through budget law. If we now start saying that whatever donation in the COVID situation or whatever other dramatic situation, because we're talking here about COVID all the time, but there are other dramatic situations that we are not mentioning, could be deductible, then we're saying, well, look, we will grant this deduction, of course, at a cost for the tax authorities, at a cost for the state. So at the end, there will be these companies that will be selecting in what we have to spend, in what we do not have to spend, and this will get a promotion by the tax system, which I think is enormously dangerous. And I give you an example. I like very much these extreme examples. I normally are condemned to be a sophist because of that, but I run the risk. I think that extreme examples are very illustrative. In Spain, during the pandemic, in the first 2 months, there was a company, relatively well-known company in Madrid, donating systematically some face masks that they were fabricating themselves in their facilities. It was proven later they were totally useless and even counterproductive. So what if we grant a deduction for this donation? It is not just that we are giving to this company the choice on what should be spent and not spent. Of course, it's private money, but at the end, we put it somehow in the circuit of public money because we grant a deduction for tax purposes. And at the end, it's not only the fact that we might have contradictory policies between what a company wants and what the state wants. And of course, in this case, the state, or at least our legislator in budget law, has been elected by the citizens. So it is in a priority position in my way, but even we might be promoting activities that might be counterproductive in the case of this face mask. So I think that not only is the law like it is, not only is this perfectly constitutional, but it shouldn't be changed. I think it's okay. And I don't think we should start introducing, even the lege ferenda, this kind of exceptions. In as much as I think I still have 1 minute, I want to talk about a very specific donation with witnessing in this. I don't have the minute, so then I shut up.
No, you don't have, sorry.
Okay, I shut up.
But
Thank you.
Thank you,
Juliana, por
Professor
favor.
Baez. Pessoal, nós temos segundo poll aqui, justamente.
We have a second poll concerning donations. As we do not, you see on the screen the question, are donations made for social and philanthropic reasons deductible for corporate income tax purposes?
E aí, Raquel, tá com você.
Obrigada, Juliana.
Okay, Juliana, thank you. My apologies, Professor Baez, but we do not have time, so we have to go ahead to the next subject. And I fear there is a question about this topic, and we cannot answer now. So it will be with all the questions that will be answered tomorrow. Next topic now. We'll talk about exactly with Professor Carlo Garbarino, which I immediately pass the floor to him. Professor Carlo.
Professor, your sound must be...
Ele está sem som. Precisa ativar o som.
Okay, can you hear me now?
Perfectly.
Okay, I am incredibly happy to be back in São Paulo virtually. I have been at this conference a couple of times in the past, and the discussion was very interesting. I have 15 minutes to talk, so let me just take the time. And I want to say a few things about the previous comments that were made. Of course, I like to thank you, the organization, particularly Professor Shui. I don't know where he is, but I say hello to having invited me here in this conference. And as you know, I have my topic is the EU Recovery Fund. But before, I want just to say a couple of very quick comments about the previous discussion. It appears that traditional tax concepts are completely outpaced by the COVID crisis. And so, for example, you know, the place where people are located, or you know, the deduction of cost and so on and so forth. This appears. This is just a very introduction to my presentation. This appears very clearly with this amazing thing that has happened in the European Union. So it's a bit of a comparative thing for everybody here, because if you took the 27 member states of the European Union and went out to analyze comparatively what they did, both with tax or regulatory measures, it would be really impossible, because it's a maze of complexity. Clearly, there is a pattern of competition of regulatory and tax models, and these models, together with also health measures, and these models share to a certain extent common features. But what has happened is that the European Union, after you know the effects of the COVID crisis were perceived in the continent, with a decline of the GDP and so on and so forth. Already in May, the Commission presented a plan for a completely new instrument called the Next Generation EU. And in July, the Council has adopted this instrument. So the Council recognized the need of exceptional measures and the need of massive public and private investment. And so the structure of this fund is completely new, because although the European Union was already able to issue bonds, there are outstanding about 50 billion of EU bonds, but there was not 6 months ago, was not even conceived as a method for addressing common European problem. It was anathema in a complete climate of so-called fiscal austerity. As you know, in Europe, member states have given the monetary sovereignty to the European Union, and they have retained a kind of fake tax sovereignty. So if there is any problem, member states are not able to use fiscal, in the macroeconomic sense, policies, using monetary policies and tax in the strict sense policies and spending. But the only way that we knew until the COVID was what Mario Draghi said, use of turbo monetary measures, whatever it takes to maintain the euro, and also quantitative easing and very aggressive monetary policies, but no possibility of using fiscal policies. Now, with this this euro bond is really strange. And when I explain European things to non-Europeans, EU things to non-Europeans, it's always quite fun. Because we really are a laboratory, we are a complete hybrid institutional entity. We are not a federal state, we are not a multilateral agreement. So it's always difficult. And even this occasion, the Commission came up with something that is really a hybrid or a legal innovation. Because just to give you, you can read this in my paper, but to give you a sense of this operation, the bonds that are being issued are amount to 750 billion euros, which is a significant amount of money. And basically, the interesting thing is that 90% of these 750 billion are included in the recovery and resilience facility. That is essentially is not meant to recover the cost of the COVID to the businesses and to the families. So a kind of insurance. That was mainly addressed by national measures through handouts and money given to businesses and families during the COVID crisis. But this is essentially meant to for member states. So member states each member state receive a quota of the 700 billions. Italy, for example, received 209 billions. So this money coming from the European Union is meant to be invested in structural recovery plans. So, to use a jargon, this is, Keynesian macroeconomics, big spending, essentially, through debt. I will come back a little bit later on that. So, because the debt, so this is a very other interesting feature of what has just happened in the European Union, that 6 months ago, debt was anathema. No possible to raise debt, particularly in southern European countries such as Italy, Spain, Greece, and so on and so forth, that already have a significant debt problem. It was completely forbidden. Now, it is not the member states, but the European Union that gets debt, and then the debt percolates down to the member states. So, for example, taking my country, we are now basically allowed to get 209 billion of debt. 6 months ago would have created a major institutional crisis. So, this is what they call a perfect storm. I mean, the COVID crisis has been a tragedy, a humanitarian and health tragedy, social tragedy, but has prompted a decision that was due in the European Union, disrupting this narrative of fiscal conservatives or fiscal austerity that is forbidden to make debt. Okay, so this is really something significant because apparently the European top institutions and of course the member states in their coming together have understood the need of major investments to address the so-called asymmetric economic shocks that generally we have in the European Union. They were particularly emphasized by the COVID crisis. So this is one interesting feature. The first interesting feature is that before the COVID, debt was forbidden. Now that is induced by the current policy. The other very interesting features can be noticed by looking at the details on how these 750 billion of bonds are issued. First, the Commission is the agent. They go into the market to raise this money, which is peculiar because usually bonds are directly raised by governments, not by institutions of governments. But this probably is due to the peculiar structure of the European Union. But the interesting thing, there are two very interesting things, is that of this 670 billion of the recovery facility, which is the main chunk of this operation, basically 310 are grants and 360 billions are loans. So almost 50% are grants. So essentially, I mean, for the loans, financially speaking, you have a kind of back-to-back structure. The European Union borrows the money, lends down the money to the member states will repay back the loans, and then the European Union will pay back to the market. But for the grants, apparently, for the 310 billion of grants, the European Union gets the money from the markets, from the capital markets, gives the money down to the member states, but then the member states do not have to repay the loans, but the European Union must pay back the market for the loans. So you have this very significant asymmetry. Basically, originally it was more than 50%, then some member states reacted, but you have almost 50% of a quasi loan, because it's a loan that becomes a facility, that becomes a grant, okay? And then compounding with this, there is a very other interesting feature, which is the fact that if you read in the Commission documents, and I would like to thank Franco Cibin, who is a research assistant that has worked on this document that I believe you can read now, and he has dwelt in the details. And if you look for the Commission documents, although this facility will be extended basically in 2021, 22, and 23, so relatively soon, the repayment will be scheduled to be completed by December 2058. So usually bonds have a maturity, a duration of 2, 3, maximum 4 years, government bonds. So here we have a very strange bond, which is not a government bond, is a EU bond, that is drawn today and will be paid back in 2058. I don't know what Europe will be in 2058 with all these ecological, environmental crises and financial crisis and everything. So we have, good 40 years to pay the money back. So, and this leads to my final conclusions. I have 3 minutes left, right, Juliana? I am on time. So the conclusions are the following. In history, economic and social developments, and now also ecological health developments, the COVID crisis, have prompted a policy that should have been already in the pipeline. So frankly speaking, I personally think, and many other people think in Europe, that such a massive kind of incentive to the European national economies was already due, even without COVID. So COVID is essentially what in evolutionary studies is called an exaptation. Instead of having an adaptation, you have something that does not have anything to do with, for example, macroeconomics, the virus, that prompts, for some reason, significant macroeconomic decisions. And the last thing I want to mention is that because of the asymmetry of the amount that is drawn and then provided to the member state and then paid back, including the grants that I've mentioned, there is a gap. There is a gap. Some money is clearly missing, and the European Union needs that money. And in fact, this gap that is going to be addressed by the fact that the European Union is planning to finally raise its own tax resources. As you know well, the European Union is a very limited budget. The member states retain the tax sovereignty and they have their budget, although they don't have the monetary sovereignty. So, and now these own resources will be introduced in the form of a plastic tax, a carbon border adjustment mechanism, a EU emission trading system, a financial transaction tax. These are all regulatory taxes. So a theory of mine is that in the future, the tax systems that in the past were inspired to the principle of neutrality do not intrude in the decision of the economic actors as much as possible. In the future, because of ecological and other similar crises, will become more and more regulatory taxes. So the European Union is planning to raise about 30 billion per year in the coming year, starting from 2021, the time to adopt this measure, regulatory measures. So they will get money to pay the loan, but essentially to modify the behavior of economic actors. So of course, emission trading, plastic tax, carbon tax, these kind of things are clearly environmental and regulatory tax. And last but not least, and this is one of my personal theories that is now possibly being vindicated by the European Union, they will introduce a digital levy tax. This tax is a tax that is meant, rather than just raising revenues, is meant to prevent multinationals, mainly American multinationals, like in the Apple case, that was decided in favor of Apple at the first level, but still the case the Court of Justice will be rendered anytime soon, quite soon. So this digital levy is meant to defend the European Union from aggressive tax planning from non-EU actors. As I've been prompted by Juliana with a very effective message, I conclude here my presentation, and I am over the time by just one minute. Okay, thank you very much for your attention. I would like to be there to have a very lively discussion with non-European. Brazil is a federal system. You're lucky enough that you have a very complex system, but still sovereignty, monetary and fiscal reside in Brasilia and are not scattered around the state. Thank you very much again, and I hope that I have been clear enough to describe these strange and odd European situations. Thank you. Bye-bye.
Thanks, Professor Carlo. Remarkable considerations. Eu vou passar imediatamente a palavra agora ao professor Bruno Silva, porque nós estamos pouco...
Thank you, Professor Carlo. I pass the floor now to Professor Bruno Silva, and I kindly ask Professor Bruno, please reduce some minutes your remarks, please, and following Professor Andrés will provide and give his remarks. So please reduce a bit the time you need. Thank you. Professor Bruno, you have the floor. Thank you very much. So here are my slides. I will try to explain a bit why this transfer pricing is important in terms of it's practical and the questions by clients and companies. These are one of the questions that are posed more frequently. Então, transfer pricing and the critical aspects of it and questions made. I think you all know the OECD has foreseen and has documents that will be released by the end of this year, and the objective of this small intervention is to pose some questions and thoughts of possible problems that are exacerbated by COVID-19. This panel has addressed the COVID-19 and the problems arising from it. It's a true global crisis at an unprecedented scale. So is what they call the Great Depression, so Great Lockdown, and there was a huge impact in terms of the economy, companies, and have affected multinational companies and companies. So we had cash flow constraints as an outcome, and how to deal with existing contractual agreements, so contracts that are existing, and how to deal with disruptions in supply chains, what to do to avoid closure of business, and also demand effects. And also the problems that restrictions imposed, potential effects on TP, and also the new TP issues and challenges that we are facing with the ALP. So the impacts of COVID, so we're talking about transfer pricing. The first question, do you think there is currently what we have, it's sufficient to address all these questions? If not, what we will have to do? The next slide, please. And so, the guidelines of the transfer pricing, so 2017 from the OECD, the transfer pricing guidelines, and basically this part is to know if future events that that were unpredictable by reference to what independent enterprise would have done in comparable circumstances. So the date of the transaction, and especially by reference and independent enterprises. So this was written within the scope of Action Plan 8, so within the context intangibles. Therefore, what was said, if I transfer intangible for the effect of for transaction pricing, do you think I can take into account non-foreseeable events or forecasted event? So to take into account something so extreme like the COVID-19. Second part of the paragraph, the question should be solved both by taxpayers and tax administrators, and what we could do with comparable circumstances. So, if so, what to do in a crisis like this one? The next slide, basically, what we have, issues that we will have now to deal within the scope of COVID-19. So please, the next slide. So first question, intervention by the governments and what they did, we addressed, grants, donations, and other actions by the government are given by a certain member of the group here. Do you think that these grants, subsides could feel or being handed to the members of the group out of a jurisdiction? We have to think about all cost-based nets. So, Tax Administration of Canada has issued a paper in 2016 saying that at first a certain member of the group cannot pass to another member to incorporate a cost, the value of the grant, or indirectly by the member of the group at first. This cannot be done or regarding independent parties. This is one of the first questions that must be answered. Guidelines of OECD, and also we have to see about these guidelines and interpret them. And there's nothing addressing this issue. Losses, tax losses. And afterwards, entities of the group, low risk at first, with more risk, as if they have more risk. And is this affected? And all the production will be negatively affected. So when we have royalties paid based on income, net income, intergroup services, right? The only criteria we have in the guidelines. So it should be paid. If the whole group is having losses, do you think it had to be booked? I will be brief. Costs, extraordinary costs. Who will bear social costs, materials? You have to buy materials. Who will pay for it? And who will be affected by the lockdown? And other problems also here being listed. We have there's no conditions for the loans regarding funding and so forth. And let's say force majeure has to be taken into account in the absence of specific clauses of these in contracts that are effective. Amend the contracts. The impact and of COTS, of TP, transfer pricing, and certain critical situations. So what does this mean? Renegotiate ETAs or study the fundamentals. Let's say, let's terminate all contracts. Would be this? So would this be one solution? Most of APAs in force, we have to see them. Or there are those that are more simple. And so the APAs is on the other side, the impact on the existing APAs. On the other side, we have comparability. And it will take probably 3-4 years. So comparability, marketing events, and so forth. How to do the comparability. Then we have functions and lockdown related with the first panel of this table. And also additional documentation requirements, either working home offices, and do the economy in other areas also. And you have to readjust your profit and how you're going to expect it. And you have now, as I said, the additional documents requirements. And transfer pricing will have to be taken into account. And its compliance and all the problems that has arisen with COVID-19. I conclude saying it's a set of problems regarding the transfer pricing can be part of it. And also until the end of the week, I would like to add and contribute with more conclusions. No, thank you, Bruno. I pass the floor to Professor Andres for his final remarks, asking him to please shorten your comments, please.
Really brief this time. Not just because I'm normally very brief when I talk about transfer pricing, which I never do, but also because making some comments to someone speaking Portuguese from Portugal is really tough. When I hear Brazilians, I have the impression of hearing my own language. It's not the case when I hear someone from Portugal, so it's quite difficult. But well, anyway, my impression, and I share many of the points that you have highlighted here. My impression is that actually, if we were not already convinced on the fact that the transfer pricing science, with a lot of brackets, was near to its ends with Pillar 1, which I think is an impression that we already had, I think that COVID-19 has been like the last step to show us how futile, how weak the whole building of transfer pricing is. Because my impression, and you mentioned that, I think it was your seventh or your sixth point, is that the traditional methods and comparability, it's over. It's over. Any point that you analyze, if you analyze the conditions of the transactions, and then you have to go into theoretical or notional, sometimes notional rebus sic stantibus clauses, and you have to go to local law, if not in the contract, go to local law to rebus sic stantibus. Then you have to analyze the changes of risk, especially for limited risk distributors, which is an exercise near to impossible in this context. And then even if you go through all that, which is, impossible, then you've got the problem of the databases. I saw some transfer pricing people trying to save the databases and say, okay, guys, let's do something. Let us reinvent databases by considering new comparables, so losing comparables, or by considering new periods, so going back to the crisis of 2008, 2009. Come on, are they comparable? They are not. Or just this magic word on, well, this how is it called? Because I remember even the name, this comparability adjustments, which is okay. We have the comparable, but it's not comparable. So let's do it comparable. The question is how. I mean, if the problem in the first place is that it is not a good comparable. So I mean, this is just a word. This comparability adjustments is just a word. It's an expression in my view quite deprived of any content. So I think that if a lesson should be obtained from this whole crisis in the specific world of transfer prices, is that actually, I mean, the formula is coming, or at least the non-traditional methods are going to be still more powerful than they are today, which are, I mean, they are very powerful already. So I think this is showing us the evidence, really. This is really showing, and I'm very afraid about, not afraid, but I feel bad if I made offense from transfer pricing people, but this is really showing that the emperor is nagged. And I think it's really showing how weak the whole building is. But that's just a remark. It's not a criticism, because I think it's very much in line with what you said, or with what I understood that you said. Not because I didn't understand you. Normally, I understand you perfectly when you speak English or Spanish, that you speak very good. But I mean, in Portuguese, it was quite difficult. Thank you.
Thanks, Professor Andrés. Vou pedir à equipe técnica.
Thank you, Professor Andrés. I asked the technical team to show the pools of two researchers while they do this. I will use the time. This is the outcome of the pools. Most answered no regarding the impediment of individuals to leave countries with closed borders. They should not be considered tax residents. And now, about donation, it's almost a tie. 54% said yes, it should be deductible. There's a split here. Thank you. I will wrap up this panel with 4 minutes of delay, thanking the IBDT for this fantastic event. It's a benchmark, a reference, as it has been on the last decades, and I congratulate Ricardo Mariz de Oliveira, the president of IBDT, Professor Carlos Garbarino. Thank you very much for your participation. Andrés Baez, also Professor Bruno Silva. I thank IBDT and all the attendees. Thinking a bit about the nightmares regarding tax caused by, unfortunately, this pandemic. So I wrap up our works, wishing you all a fantastic day. Thank you very much.